guys, it is Caleb with the Investor's Journey podcast, and I'm gonna try my best here. This is the first episode that we've ever done for this podcast. It's probably gonna be pretty rough because I haven't been able to research anything this week, and this is the first week of doing it, so just bear with me for whoever watches. If you want, follow, leave a comment, anything I could do better, probably a lot of things. And follow for the journey just in case you want to see it get better or get shouted out in the next video. But let's try getting this one over with and seeing how we do. So, how it's going to work is the first couple of minutes. This is for the following episodes. First couple of minutes will be what happened the previous week, kind of just not doing too much because it's already happened. There's nothing we can do to change it, but I want to give you guys just some background info in case it's your first video or you'll miss the previous week. And a majority of the show is going to be what's going to be happening this upcoming week when I release these Monday mornings. Preferably before the market opens my time. I'm Mountain Central Time, so 7:30 here. But just to kind of get, kind of just like your daily newsletter of like 7 to 8 minutes of what's happening generally in what is gonna like kind of being predicted or just news of the outlook on the week. So, with all of that, welcome to the Investor's Journey, and let's get started. So, this is from, let's see here, this is from Edward Jones, and the headline is Halloween Fails to Spook the Markets, which is kind of nice to see that every year it has spooked it a little bit, but this year it's still pretty good, because I remember my first year investing, it was in October, and I bought at the very beginning of October, and then I just saw my stocks are down and down and down and down, and it was not fun. But that's good. And let's see here. Investors seemingly continue to look through a government shutdown that will soon be the longest on record. It is also good to see that the stock market is on an upward trend in this government shutdown, because it shows there's good sentiment and the investors are actually not really too worried about that. They're not getting shaken up by that or feared by that at all, which is nice. And corporate earnings are coming in better than expected, which is also pretty good. It means it's better performance for the stock. Stock value goes up, more dividends depending on what everyone's invested in. And it looks like the volatility picked up in October, but also the markets made impressive gains, which is nice to see because, again, when I first started investing, it was in October, and I just saw them going down and down and down, but that was also in 2023. So just a couple key takeaways from that. I'm not going to go too much into this. Then we're going to move on to T. Rowe Price. This is the global markets, not just the U.S. markets, kind of stuff like that. So the Fed cut rates, which is, it's good because it means obviously everyone's paying less interest and stuff like that, but also it tends to, if the Fed cuts rates, the stock market usually goes down a little bit, but we haven't seen a whole lot of that, so that's pretty good. And let's see here. So it looks like major stocks are mixed, so they're not up or down last week because of large cap driven rally. So they're going up a little bit, but not too much. We have seen this over the past couple of months, is just a lot of large tech stocks going up and up and up to help the S&P 500, NASDAQ, all that good stuff. The US and China agreed to a trade truce, which is good because I remember waking up and I was actually in Hawaii at the time, and I looked at my stock portfolio and it was down, and I'm like, why is this down? And then I looked it up and I'm like, oh, there's like another, I don't know exactly the tariff percentage, but Trump had just announced another tariff, and I'm just like, my stocks are down like 40 or 50 bucks. I was so sad. But it's good to see that they're on a truce at the moment, so stocks should bounce back from that pretty well, and they should keep rising with all of the other good stuff that's happening in the news. Again, we talked about this already, but the Feds lowered the rate, which means they may not cut it in December, what is looking here, but we will see. We don't have too much information on that yet because I haven't been able to research this week. Let's see what else is here. I honestly don't know what this means. We have to get into that eventually. So this is just like the closes and stuff that is happening. It looks like the mid cap is the worst performer of the year to date and also of the week. But everything is positive for the year, which is nice. It means that there's good sentiment overall throughout the entire year so far. Everyone's have had good earnings despite the treasury yields and the tariffs on everything and all that stuff. Let's see what's going on in Europe. I do not know what this means. Okay, so the UK housing market is resilient. That's good. I'm pretty sure. Again, I have not had much time to research this week. I do genuinely apologize. I'm just trying to get this one out because I said I would post every Monday. But after this first episode, we get some of the kinks started to work out. We're gonna get all of that on schedule, being able to do all that stuff. But we're gonna move on to the weekly market recap with JP Morgan. So let's see here. This week's chart highlights strong quarter three earnings led by tech and financials, with earnings per share growth projected at an 8.5%, which is very good for tech and financial stocks. It looks over here, sector contribution by S&P growth, info, tech, financials, and even utilities are pretty good gainers. And then it looks like healthcare and energy are not, which earlier this year we did see that plummet in the United Healthcare, which would probably, if I were to guess, a lot of what's bringing this healthcare down. And then info or tech and financials have gone up very significantly because this has been a very good year for both of those. I personally hold more financials than tech. I don't really hold too much tech. Um, what is this? The S&P returns percentage. Okay, technology 1 week is 2.7. Wow. Com service 1%. And then it looks like utilities is actually down. Huh. That's interesting. Industrials is up, 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 up. Oh, down. So consumer staples and utilities are the only ones that down. I can understand consumer staples because of all of the tariffs that have been implemented recently. Less people are buying stuff. It all costs more, so their earnings are shrinking, and people are buying less, so it's shrinking on both ends. Utilities is an interesting one, though. I'll have to research that and see kind of what's going on with that one. And then I don't know what this means. And I don't know what this means, so we're actually gonna. I spent a little bit extra time on last week just because I haven't really been able to find a good um, outlook on next week's market. The only one I found so far is the Schwab one, so we're gonna get into this one. This is the weekly traders outlook. Looks like stocks hit record highs this week by mega cap earnings, tech earnings especially, going back to that tech driven rally on at T Row, and how far up, oh, what is my mouse doing? How far up they have gone in the Q3. So that's good. All the majors, Russell 2000, they're all hitting record highs, which is amazing. I hope they go higher for everyone that's invested, and everyone that isn't invested should invest now, because as Warren Buffett famously said, it's not about timing the market, it is about time in the market, which I believe in wholeheartedly. I've seen it. I've tried timing the market. It doesn't work out that well. If you just keep it invested, if it goes down a little bit, it will eventually bounce back. If it keeps going down, this is not financial advice, so don't say anything, but I would hold on to my holdings basically no matter what, unless the world was like completely ending and we knew it for a fact, like nukes had been launched. So there is that. We already went over the whole week, so we're going to go to this outlook on next week. I know you can't see my hand, but I'm pointing at the outlook for next week. So let's see here. So I don't know what much of that is, but there's going to be, let's see what the economics. Monday, we're going to have construction spending, ISM manufacturing index. Tuesday, factory orders, trade balance. All of these fancy little things are going on throughout the week. If you want to pause the video or pause the podcast and take a quick look at this, you can. And then we're also going to have all of these earnings. So it looks like on Monday we're going to have 1, 2, 3, 4, 5, 6, 7 stocks in there. And the one that it highlights out to me is the Palantir Technologies, because they're part of the tech. So if their earnings are good, I think tech will go even higher. And then we do have Aries and Simon Property, which is properties, which also should hopefully help those go up. And then I also just saw this one, the Technologies Inc. I'll have to research that one as well. And then again, we have AMD, we have more tech, and a lot of these, let's see here. Spotify Technology, that's not really technology, neither is Uber. We have a medical company. Hopefully their earnings are up. It looks like we have a couple more on Wednesday. Just going through here. Doesn't look like we have another medical one, but it doesn't look like we have a tech one. We do also have a consumer staples with McDonald's. Thursday we have, excuse me. Thursday we have an oil and gas. And then it doesn't look like too much else on that. And then on Friday we have Constellation Energy, another Duke Energy, Enbridge, Franklin Resources, KKR. Okay, so we have a bunch of earnings this week. And I'm personally looking for the REITs and then also the tech stocks, because I believe they're going to be able to, or their earnings should be higher than normal, especially with the rallies at the moment. And then, yeah, the rates, the Fed rates got cut again. Consumer confidence fell 1 point to 94.6, which is a 6-month low and below the 95 expected. I still think there's a lot of consumer confidence in the stock market, and we're still going to be seeing highs upon highs upon highs upon highs. So that'll be good. And then everything else, again, I haven't really been able to see too much. I haven't been able to research. I'm trying to research for at least like half an hour every day starting after this video. I was just kind of rushed to get this one out. There's probably not going to be a lot of people watching this one, so hopefully that is okay. But starting from now on, I am going to try my hardest to get more factual evidence, research more, be able to get all this stuff out. But I am going to leave this first episode here for you guys. If you guys did like it, which I will not be ashamed if you don't, just rambling. If you want to see the progress, though, or see it get better and better over time, just hit the subscribe button or the follow button. I'm on X, Spotify, TikTok, Instagram, YouTube. If you want to watch or listen to, there's there. Longer forms are YouTube, Spotify. All the other ones are just going to be like short clips, kind of stuff like that. But yeah, follow, hit the bell icon for me if you guys want to. And I will see you guys next Monday with a lot more prepared. Stay tuned. See you guys next time.